Traders, how are you? Very short YouTube video today. Pushing the envelope, as always, right? Trying to be different, showing you, the realities of trading. Literally pushing, well, not literally pushing that. In fact, I've got an envelope lying. Just happened to have an envelope lying around. I just spotted it. But now, in all seriousness, pushing the proverbial envelope, right? Yeah, going to show you some amazing stuff in this video. Trying to keep it short because Line of Duty series finale is about to start, and my missus is going to scream at me if I take longer than 10 minutes. But I'm going to really, no one's showing this stuff. I'm actually going to show you what I traded for a full week last week. Monday, Tuesday, Wednesday, Thursday, Friday. Every single day I'm going to show you my fills with no gaps in between, because I don't believe that anyone, I would say 99, well, I haven't seen anyone, to be honest, showing this stuff, right? They will tell you what you should be doing. I don't see anyone showing their full, trading period over a week or whatever with their full size E-minis or whatever it is they're trading, right? No one's showing it because it just doesn't exist, I don't think. And I like to push the envelope out, and as you guys know, maybe know or not, I get a lot of, not a lot, but I get a few donuts, who try to bring negativity to the game. And actually, I love it because it really inspires me to push the boundaries of what's actually being shown in the public. And I want to show you, and I like to do it to inspire people as well, because I think that if people see, hang on, oh, okay, this is actually what makes money, then it might actually motivate you to actually do the right things and not look for shortcuts, because shortcuts won't make you money, okay? They might help you get into some gambling mentality type of trading, as in, just clicking a button and hoping for the best, but that's not how you build a career in this. To build a career in this, go look at professional tools, no technical analysis junk. Keep saying it and I'll keep saying it. Complete rubbish, okay? Never seen so much crap in my life. Don't know why people get so upset. Had some guy say to me today, oh, no, it's possible to make 20 pips a day in Forex using technical analysis. As soon as I asked him for any evidence of this, disappeared. Don't know where this 20 pips a day comes from anyway. It feels like, I know what people do. They just wake up, look at their alarm clock, and it goes off at 20 past and think, all right, we'll make it 20 pips a day today, or whatever garbage. I don't know where these random numbers come from. It's complete rubbish. It's not how this game works. That's why it's so important to only listen to people who do actually show you that they practice what they preach, right? Full size E-mini contracts this week. I'll show you the full week. There will be education as well. We're going to talk about volatility. Very briefly though, like I said, Line of Duty, right? Series finale, quite excited about that. So I've got to quickly get this done in under 10 minutes. May have a Telegram group coming, just exclusively for G7 members, but I'm not going to talk about it too much today. Just something to whet the appetite, but it's potentially, not promising anything, potentially, that's why I say question mark, is potentially in the pipeline. So let's get on the charts. Let me show you my full week, talk a bit about volatility, chuck some education in there, push the envelope, yeah, and then let you get on and have a great rest of day or weekend or whatever day it is that you're watching this. So let's get on to the charts. Okay, so as you guys know, I use Sierra chart by now, so don't really like to talk about much in terms of the education without obviously backing it up with showing you that I have been doing what I'm kind of asking you guys to do. So trade window, there you go. So you can see my count number there, and you can see this was Friday, 12.75 points, and then you've got my account number there. All right, so let me just move that out of the way, so you can see it's my live account, and I'm going to show you my order fills. Show fills, okay. So I'll show you exactly, just very quickly. I'll obviously we've got, so this here was approximately, well, you just saw there, it was just about 12 points. So this was actually about 0 here. This in itself was 12 points, right? 2 contracts, as you may have seen on that window. Then over here you had, so what is it, 84 to 89, 5 for maybe about 10 points there on Thursday. Okay, so it's Friday, Thursday, and don't worry, we're going to go through some of these trades very briefly for this week, and then we'll go through. So what else? There we go. That's Wednesday. Okay, so that Wednesday was 77 to 83, so maybe around what is that, 77 to 83, so 6 and 3, 9. Okay, and then also I just spotted it up there, if you noticed it, on Thursday morning I took some longs in that space over there, right? So that was another 6 to 10, 4 plus around another 4, so about 8 points. Okay, so you can see here, the reason I do this because I want you to see, all right, exactly what I've done throughout the week, every single day. No opportunity for me to kind of just focus on one area, the whole thing, okay, the whole shebang, essentially. Don't see anyone showing this stuff. I really don't think it exists, if I'm honest with you, and I think people know that. Tuesday, no trading, okay, and then Monday was basically a break even, I would say. I made a little bit of money, but I would class that as a break even. And actually, the day before as well, I'm not going to count this, but that was Friday. So there you can see, I think there was about another 8 or 9 points on that day. So yeah, there you go. Open book, guys. Open book. Where are you going to see this? Nowhere, right? Don't even say this in an arrogant way. In fact, the opposite, right? Who knows what will happen next week? It's because I want people to kind of, like I said, I really want people to see this and be like, oh, do you know what? Actually, there is some benefit to me doing this the right way and not just whacking some silly little lines on my chart and hoping that the market bounces there because that's what someone's told me to do, and it's easy. It's not. This is how to make money and develop a career, okay? It's got to be done the proper way. There is some discretion applied, but obviously use the tools to obviously help you frame those decisions, okay? So there you go. 12 plus 10, 22, 31, and 8. So what's that? 40? Just double check that. So counting back the other way, 17, 27, 29, about 39, right? I think it's about 39 anyway. Points in the ES. I don't know what that is exactly. So it was 2 contracts. So if we do 39 times 4 ticks, so it's 156 ticks times 2 contracts, 3,900. All right, for the week. So not, obviously typically I do try to push for more than that. Sorry, dollars. For more than that in a week, but it was a low volatility week, and that's what I wanted to talk about very briefly, really. It being a low volatility week, how did I actually set myself up for it? So let's just bring up the market profile. Okay, so what I wanted to say is, so the week in question was really, I believe, here, Monday, Tuesday, Wednesday, Thursday, Friday, right? Thursday, Friday. Okay, this is how professional traders do this, guys, right? If you've never kind of seen this stuff before, this market profile, no lines in sight, not even any candlesticks, okay? It's framing the week, really trying to understand how should I approach this week. Now, The reason I talked about volatility, don't hear this talked about by anyone. Right? It's so important. You approach these things differently when the market is obviously not as volatile. I was going to say has such a wide range, kind of the same thing. You can use them interchangeably. Look here, coming into the week, the prior week was obviously very volatile. The Friday, the market was obviously trying to find some balance points, moving out, coming back, and then kind of clue was there when it held, right? And then we did have this quite a bit of volatility going on here. I don't know what exactly that was. Maybe some data or some news or whatever it was, which I don't think is important intraday, but obviously it did have an influence on the market over the week. And then we really made this push for all-time highs, and that's where things got really, excuse me, that's where things got really interesting. Because for me, I'd noticed if you look at how wide some of these profiles are, things started to really calm down in here. Monday, Tuesday, Wednesday, Thursday, Wednesday, and then Thursday we did have quite a bit of a big move, but don't forget we opened here, okay? So most of that volatility in terms of the expansion out of this range, it happened overnight. It happened before the main session, before the RTH session. And again, if you're new to all of this, don't explain this in the G7 course, but it's nothing new. It's what professionals are looking at. They like to split their sessions into when it's very busy and when it's not so busy. So overnight, really important you understand the dynamics between the two of them. So we came into obviously Thursday, and then Friday, no surprises, we came back in. It was obviously a very range day because the market was happy in this area. So when it failed, that's where it's going to come back to, right? It's going to come back to where it's been happy before. And look at the volatility. Very similar to what had happened before in terms of the range. And that really helped me to understand what I could really expect out of my trades and not to push things too much. So we'll go and have a look in a second at a couple of days very, very briefly, but this is what I just wanted to show you how I framed the week. No indicators, right? If you're thinking, you know what, I like indicators. For me, have no place in trading. But you know, obviously, if you like to use it as some sort of framing, it's, I guess, could be argued. But for me, they don't really have any value at all. I really feel that you need to kind of frame your week using things that are kind of, I would say, more in the moment rather than lagging. You know, profile is all about what happened at that moment in time, and that's why it's so powerful. So you can see here, I'm not looking for any sort of lagging thing where it just bounces off and tells me that, that's what has been going on in the market. Actually, what I'm looking at is more static positions of what was happening in the moment and then combining that information. Again, it sounds complicated, and it isn't to an extent. Okay, you've got to obviously put in the time. You know, you can't expect the market to spit $4,000 at you out of the week like I did last week without having put obviously a bit of effort in, right? It's not just going to happen. So you do need to come up with some sort of analysis. Doesn't have to be as like sort of the same as this. It can be slightly different, but just wanted to kind of show you how I framed the week, how I compared it to volatility obviously coming out of the previous week, and how I adjusted basically, right? That's why I was taking kind of things off in these areas, or even trying to enter in these areas, because I recognized it's different. Obviously, I'd be treating this week slightly differently, right? Here, this was Friday. So this whole week, very, very different trading to this week. In fact, that in itself is a lesson there. Just look at the two. You've got to be able to frame those without an indicator is not obviously going to tell you that. So let's have a very brief look at maybe one trade before my missus screams at me because line of duty is about to start, and then we can end the video. Okay, let's get onto the charts. Okay, everyone. So actually, what I've decided is the day that I'm going to talk about is this Thursday. Okay, Thursday, and I'll tell you why I think it's the most interesting day of the week, because it's the one day where something changed. We opened well outside of the range, which was quite different to Monday, Tuesday, Wednesday, and then look, Thursday, very different day. And then Friday was obviously back to kind of a range type of day. So I think this Thursday, this one here, very, very interesting, which is, you can see it side by side, all right, this day here, essentially. And what is right, we've come in overnight session, right, split these two out, regular trading hours session with the cash market. Okay, what's very interesting is coming into the open. Okay, what's everyone expecting in terms of those who have a retail mindset? And I say retail, but probably most human beings, but it does tend to be in the retail environment that I see this, is people are thinking, oh, it's very high up, it can't go any higher, I need to see a big pullback, right? Might be kind of sensible as we get into the session, but we still got the morning volatility to come. That surge in orders that's likely to come at the opening bell at 9:30 EST. Again, no indicator can tell you this. It's just kind of thinking outside the box. Is what's everyone expecting? Well, look at the distance between where we've been all week and where we are now. We're miles away. Everyone talks about retracements, pullbacks. And I remember distinctly thinking, okay, we're not opened yet. What's everyone going to be thinking here? Oh, we're going to pull back. And honestly, I thought to myself, this entire, not market, but most people who get caught offside, wrong-sided consistently, I know they're going to be sitting there thinking, I expect a pullback. So I typically tend to do the opposite, which is what I did here. I did the opposite. I was only expecting a quick move over the kind of overnight highs, which I kind of got. Took the trade off, and that was it. So, you know what? Really, lesson number one here is you've got to be able to think a little bit outside the box and almost do the opposite of what 99% of people might be thinking, because how many people actually make money in the market? Obviously a small percent, right? So you can't be thinking kind of what everyone's thinking, which is, oh, it might be pulling back and so on and so forth. And that's why very dangerous to kind of follow some sort of indicator, or anyone who tells you you can kind of build some sort of systematic way of doing this. You can't. You're going to have to apply discretion. There's no other way around it. If you think there is, gambling. Okay, that's all you're doing. You're just heading for a bad ending, essentially. And you know this, you'll end up going in circles for years. You've got to accept that you do need to think a little bit outside the box. So like I said here, everyone's kind of expecting this to pull back. That psychological thing about, oh, we're so high, I need to retrace, and so on and so forth. And that surge in volume that I expected to be at the start, I thought would be counter to that thinking. And that's why I did get long here. There were other things, obviously. Most of the time here was above the VWAP, and people know this who have taken the G7 course. Obviously, if you're above the VWAP consistently, probability, right? If you start to skew towards being on one side, obviously the more occurrences that happen over here, and you start to build a fatter distribution over here, then obviously you're going to have a higher probability that you will stay there. So that was obviously in my mind as well. Then coming into the session, like I said, it's slightly different how the transition taking place. You're not expecting kind of this to continue when you have had the pullback. Will obviously come at some stage. The way we had the violent reaction at the top and then the violent reaction back in suggested to me that, okay, this thing is now ready. It wasn't able to sustain, right, these longs. The sort of desire isn't there anymore for buyers to keep pushing this. like to pull back. So I didn't fight it, right? Didn't fight it. And when we got back into the range, obviously that's when I started to think about pulling the trigger. Now, in terms of the footprint, both entries taken on the footprint, there you can see the first one right there, as we did get some selling coming in, people trying to fade the market in this region. You can kind of see it with the heavy imbalances, and then obviously we took that area out, and then further later on, 20 what time was that? About 10:43 New York time. So if we look at it here, same sort of thing. We were starting to get some heavy sellers coming in, which I thought I could use as a nice kind of base, right, to gauge where the pain points might be for some of these guys. So that's exactly what happened here, and we turned around as I expected. Okay, and I had quite a bit of decent kind of volume to lean on in this area, because obviously we've been trading in that area. Probably covered my head a little bit, but you know what I mean. We've been trading in that area for quite some time. As you know, on the market profiles, we've been trading there for the previous 3 days. I think it was Monday, Tuesday, Wednesday. So coming back into that area, it was always likely to hold. And then you can see the market failed to kind of get to the other side and really make any sustained moves to the other side. So as soon as we came back in, that was always inevitable that was going to happen. So look, like I said, line of duty awaits. Hopefully that gave you a little insight into how I kind of look at volatility, and also look at unusual opens when transitions have happened from a very balanced environment into an imbalanced environment. And obviously I showed you my whole week. Obviously there's a lot more to it than that. I talk about it a lot in the G7 course, and also on my Instagram. So don't forget to follow me there at NV Forex. Okay, have a great week, and definitely be putting out some more interesting videos in the coming days and weeks. All right, guys, have a good one. See you later.